OK, let's talk once again in Stamford, Connecticut, on the east coast of the United States. Peter Schiff, president of Euro-Pacific Capital, a US-based brokerage. And in London, Kelvin Hopkins, a member of Parliament from the Labour Party. Peter Schiff, let's talk about the doomsday scenario here. What if the rescue plan in front of Congress at the moment doesn't work? What if people don't trust it?
Well, it's not going to work. I mean, it never works. The government just makes one mistake after another. You know, all they're doing is creating inflation. We're going to print up a bunch of money and buy up these mortgages, but it's not going to stop real estate prices from falling. It's not going to make Americans be able to pay back these mortgages, and it's not going to stop with mortgages. They're going to buy up auto debt. They're going to buy up credit card debt, commercial mortgages. Who knows? They might end up buying real estate. They might end up buying common stocks, and they're going to keep creating money. And we're going to hope that the Chinese and the Saudis and the Japanese keep lending us money that we can never repay, and eventually the world is going to stop doing that, and our currency is going to completely collapse. You know, what we need in this country is not more inflation and lower interest rates. We need higher interest rates. They're much too low. We need to discourage borrowing and encourage savings. Now, sure, that's going to mean the recession is going to be a lot more severe in the short run, but that's the medicine that we need. The economy is hopelessly out of balance. We need to restore an equilibrium. We need to purge the excesses from the American economy, and we can't do that without higher interest rates.
But Kelvin Hopkins would argue, and Mr. Hopkins, tell me if I'm putting words into your mouth here, that you can almost spend your way out of a recession. If you lower interest rates, you think people will have the confidence to go out and spend it, and there'll be a trickle-down effect that'll help the economy. But if you close up, that's the end.
Yes, I mean, I think America may be different from Britain, but in Britain we desperately need a serious reduction in interest rates. There's a temporary problem with inflation, which even the governor of the Bank of England said it is temporary, and it's going to drop to a very low level next year. So inflation is not the problem. I think, in fact, deflation may be the problem, as they had in Japan. When prices start to fall and people anticipate further price falls, stop spending, and you just build yourself into a vortex of a depression. And we can't afford that. That would be a nightmare. So we have, I think, now to reduce interest rates and start to regulate banking in every way possible, and start to, and I think sometimes we've got to spend more as well in terms of government money to shore up the economy and tax the rich to pay for it, possibly.
Well, okay, Mr. Hopkins, stay there just a second. Peter Schiff, I can see your lips moving. I know we couldn't hear you because we were on Kelvin Hopkins at that point, but there is a big danger with deflation, isn't there? And we did see it in the Far East.
No. Well, first of all, there's nothing wrong with falling prices. If things get cheaper, if things become more affordable, the government doesn't have to save us from that. The problem is when money loses value and things become more expensive. And there is an inflation problem. Inflation is not simply rising prices. That's a result of inflation. Inflation is the creation of money. And that's what central banks all around the world are doing, particularly here in the United States. And we print a lot of money, and then the world prints money to keep their currencies from rising against the dollar. But you don't create economic growth by consumption. It's the opposite. It's lack of consumption, underconsumption, savings. That's what finances capital formation, and that's what leads to legitimate economic growth. When we just create money and spend it, we're destroying wealth, and ultimately we're going to destroy our currency, and the world is going to be in a much bigger problem with hyperinflation than with just a severe recession,
which is what
we have in the cards.
That is not real money sitting in a bank invested. That just makes money for the money men.
I don't follow.
If it's just sitting there, it's not working. It's not out there sort of being invested in the economy, creating jobs. It's just sitting there making money for people like yourself who would use it to invest to make more money.
No, but money has to have intrinsic value, and money needs to be there to fund capital formation. When people put money in a bank, obviously it can be loaned out to an entrepreneur to make an investment. But what we're doing in America, we're borrowing trillions of dollars from the rest of the world and blowing it on consumption. We have no way to pay this money back. We use our borrowed money to buy clothes, to buy food, to buy houses, to buy cars, to do all sorts of things, but we have no means of repaying the debt because we're not acquiring any income-producing assets with the money.
Kelvin Hopkins, that makes perfect sense, doesn't it? If you haven't got real money, you can't spend it. It's a house built on sand, a nation built on sand.
Well, I mean, I think Mr. Schiff obviously lives in a parallel universe to me, but in Britain, we are facing a serious recession with mass unemployment, and the only way to avoid that is to sustain some degree of spending power for the things that people in Britain produce, goods and services. If you raise interest rates, that makes a great big hole in consumer demand and drives us into depression, which will mean mass unemployment and great poverty. I think that is mad economics.
Well,
We've been there before. I mean, in the 1930s, depression was all about this.
Yeah.
Sorry?
Look, why don't you take a trip down to Zimbabwe and see how well inflation works? All you're talking about is the government creating inflation. It doesn't do anything. All it does is redistribute wealth. It creates the illusion that there's some economic growth because you're debasing money, but you can't create prosperity. You can't create purchasing power with a printing press. You can only do it through real production. And government interferes with that. Government is not the answer. They're not going to solve these problems. Government is creating these problems.
But real production will disappear if there's no demand for the things that real production produces. We have an economy that produces goods and services.
No.
Sorry?
Excuse me, but demand is unlimited. Everybody wants things. What limits demand is supply. It's production. Everybody wants stuff. You don't need to stimulate demand. What you need is production. And the government interferes with production with excess taxes and excess regulation. And if they gave us sound money,
I tell you what, let's try and get this back a little bit more on track about the particular crisis that we're facing at the moment, the $700 billion plan before the US Congress. Kelvin Hopkins, is that going to help the British economy in any way?
Well, obviously, we're linked to the American economy. We've bought a lot of this unsecured debt, and it's causing terrible problems for ourselves as well. I mean, precisely how we get through this on a day-by-day basis, I don't know. But there are some fundamental things. First of all, we have to reduce interest rates to revive the housing market so that people actually don't stop spending and hide in their homes, desperate to pay their mortgages.
Just help me with something.
Just create mass unemployment.
Just help me with something, Mr. Hopkins, if you would.
Mr. Schiff,
just for a moment,
you have to save more.
Please. Yeah. I've been hearing all week, in fact, the last 2 weeks, that people have bought a lot of unsecured debt. Why would anybody? I mean, you know, if I was sitting out there at home, and I'd be wondering, well, why would you buy somebody else's debt? Why would people want it?
Well, I'm not a participant in the financial markets, but I understand greed was part of it. You buy something and sell it on and make a bit of a profit on the way. And I understand some of these unsecured debts went round in circles and people buying back the same thing they sold on a few weeks before. The whole system is completely crazy. And we should never have lent to those people who couldn't afford to repay their mortgages. We should have had an entirely different approach to lending and borrowing and investment and running the financial system, which would be much more regulated and much more, I think, transparent as well.
But Peter Schiff, OK, let me come to you.
Free market.
Hang on, please, may I ask a question here? Mr. Hopkins is quite right, isn't it? You know, let's boil this down. A £10,000 debt could be sold on 10 times and become a £100,000 debt, and yet the original sum is still 10,000, and yet it's multiplied by tenfold. There needs to be some kind of regulation to stop that happening, doesn't there?
No, remember, it was the regulation that created it. It was the Fed with its low interest rates and the moral hazards of Freddie and Fannie. Remember, I was writing about the housing bubble in 2003, 2004. I described in detail exactly the way it was going to collapse, how it was going to impact our financial institutions. I saw it coming from a mile away because I knew the effects of government interference in the free market. I agree, it was crazy. We never should have had these loans, but they never would have existed absent government. Government laid the foundation. Government set in place the framework that made this all possible. The free market would have prevented it. The risk aversion of a free market would have made sure that none of these loans were ever created. We need to go back to a freer market with less government interference and with sound money. We can't have government simply creating inflation, lowering interest rates, and trying to artificially stimulate economies so we can keep re-electing incompetent politicians.
Hey, so what do you think now when you see the banks in some cases effectively being, if you like, nationalised, taken under government control? What does a free market man like you think about that?
I hate it. I don't like what's happening. And I know it. Look, the government is doing this $700 billion bailout. You think they know what they're doing? You think they can run this money effectively? They couldn't run the war in Iraq. They can't even deliver the mail over here effectively. Government bureaucrats are incompetent, and centralized planning, it didn't work in the Soviet Union. It's not going to work here. And it's not going to be $700 billion. It'll be $2 or $3 trillion. This is going to be a huge boondoggle, and potentially it's going to lead to a collapse in the value of the U.S. dollar, a run on our currency, and hyperinflation. This is very, very scary what the government is doing. And that's why I'm advising all my clients to get their money out of the United States. I mean, we buy foreign investments, we buy precious metals, we buy commodities. I won't invest in this country because our government is destroying it.
Peter Schiff, Kelvin Hopkins, two sides of the Atlantic, two opposing points of view. Appreciate your time. And there at least you have it from certain points of view. there hasn't been anything like it in years. There may never be anything like it again. At least on that, most of our guests agreed. And we spoke to them in New York, in London, in the Middle East, in Tokyo and in Kuala Lumpur, plus various other points around the world. Their views, we hope, have helped you understand a little bit more of what was described in this programme as toxic debt, toxic assets, a poison that's seeping around the financial world and may yet affect all of our lives. From me, David Foster, and from the rest of the Inside Story team, thanks for watching. Bye-bye.